We're sitting here in December of 2023, and it has been an absolutely wild year. Unfortunately, it's been crazy for the wrong reasons. It's been a historic year for bank collapses. The banks that have collapsed so far here in 2023 have totaled over $548 billion in total assets held by the banks that failed this year here in 2023. That makes it the single largest year for bank failures, outpacing both 2008 and 1984. Because of a lot of these bank failures, we get clients that call us and they ask us questions like, where can I put my money that's safe? And so we thought it would be a great idea to make a video here at the end of 2023, setting the stage for next year. What is a good, safe vehicle for your money in 2024? That's what we're talking about today. So of course, you can always get better rates of return if you're willing to take risk. And so I don't want you to think that this is a video that's encouraging you to not take risk with your money. We think that any good holistic portfolio is going to have a portion of your dollars allocated to stocks, mutual funds, maybe even real estate, some line items that inherently contain more risk. And as the saying goes, more risk, you should expect more reward. I like to say that risk is free and guarantees are expensive. And all that means is if you're looking to grow your money as fast as humanly possible, well, then you're probably willing to and going to need to take some risk. And so that aside, we're not talking about those types of vehicles today where the goal is to take as much risk as you can in order to get the biggest reward possible. We're talking today about safe money. Where do you put your money if you're looking for a safe, steady, reliable return, something that's not going to have huge swings up and down? And that answer gets more and more difficult with the changing times. Typically, the answer for safe money would be bonds. I think that's what most financial advisors would recommend to their clients who are looking for some kind of allocation into safe dollars. And that typically is going to work really well. In fact, it's worked phenomenally well over the last 10 to 15 years, but we pretty much saw that come to a screeching halt in 2023 and near the end of 2022. And the reason is because of rising rates. See, for the last 10 to 15 years, rates have just been steadily falling. And as rates fall, the bonds that you own become more valuable because new bonds being issued are issued with smaller coupons. And a smaller coupon bond is not as desirable as a larger coupon bond. So when rates are falling, your bond allocation, your bond portfolio looks really, really good, especially on paper. But that's not the environment that we find ourselves in today. We find ourselves in a rising rate environment. And in a rising rate environment, the bonds that you already own become less desirable. Why do they become less desirable? Because new bonds are issued with higher coupons, higher rates, which means the old bonds, the ones that you probably already own, are less desirable than the new ones. And it makes it a difficult proposition to use bonds as a safe money alternative to stocks or real estate in a rising rate environment. And that's where we find ourselves here in 2023. And it looks like that's where we're going to find ourselves going into 2024. So why this video? Why are we talking about safe money? Well, because the number one traditional alternative to safe money, not investing in stocks or mutual funds or real estate, is bonds. And it looks like in the short term, the short to medium term, that's going to be a losing proposition. So where do we go from here? Well, the other safe money alternative would typically be thought of as banks. And this has been a historic year for bank failures. And so banks don't feel like the safest place to have your money. And I don't think that's a risky statement here. However, I do think that banks can point us in the direction of a safe money alternative that's going to be really good in a rising rate environment and quite a bit safer than what you might expect from your safe money alternatives. But if banks are failing, how in the world can they be a benchmark for what we should be looking at for our safe money? Well, I don't want to look at what the banks are trying to sell to the public. I want to look at what the banks are doing for themselves, because banks are in it for themselves. They exist to turn a profit, and they are very good at turning a profit. And so how do they do that? That's what I care about. Of the largest banks out there, that is those banks with over $50 billion in total assets, they invest around 9.5% of their capital in life insurance. Isn't that crazy? Banks are the largest single owner of cash value life insurance in the United States. They own almost $200 billion. It's $182 billion of cash surrender value in life insurance contracts. Now, I'll just say, if it's good enough for the banks, it's got to be good enough for you and for me. But what is it that banks like about cash value life insurance? Well, number one, all of the dollars are backed by a contract. There is no fractional reserve lending. If you have money in a life insurance contract, that money is held in cash by the insurance company to pay all their claims and all their obligations. There's no such thing as a bank run in the life insurance world because they're literally holding cash. If every single customer wanted to take loans out of their policies, that life insurance company would have to be able to fulfill those obligations because it's a contract. It's not this wishy-washy, odd fractional reserve lending relationship that you may have with a bank. So why do banks like owning cash value life insurance? Because those are hard assets. The cash is actually there. It's held by the insurance company on your behalf. It is not being loaned out. And there's no such thing as a bank run in the life insurance world. The second reason that I think banks really enjoy and like investing in cash value life insurance policies is because those cash value life insurance policies are going to be interest rate positive. That is, they are not inversely correlated to rising interest rates like a bond portfolio would be. So when you see rates increase, you're actually going to see better rates, better fixed accounts, better provisions inside your cash value life insurance policies, because those policies, most of the time, if not all the time, unless it's a variable contract, but if it's a fixed life insurance policy, so we're talking universal life, indexed universal life, whole life, all of those three product lines are positively correlated to rising interest rates or just to interest rates in general. So as rates get better or higher, you're going to see higher fixed accounts. You're going to see a higher dividend scale in the form of a whole life insurance policy. You're going to see higher caps in the form of an indexed universal life insurance policy. And so it's a safe money alternative where the cash is actually there. The company has to hold cash for you. They're not lending it out left and right. And it's positively correlated to interest rates, which makes it a really interesting vehicle heading into 2024 when interest rates look like they're still going to at least maintain where they are and probably tick up. And at the same time, we're in this environment where banks are under constant pressure and stress due to inflated asset values and pretty low reserves that they're actually able to hold. And that's why we've seen banks fail this year. So if you're heading into 2024 and maybe you're approaching retirement, maybe you are getting weary of how most of your money is allocated into risky investment vehicles, I would just submit to you that one of the things you should probably look into is cash value life insurance. And the reason you should look into cash value life insurance is because, number one, they are contracts. The money that you have inside that contract is actually there. It's not being loaned out 10 times over. If you have money in a life insurance contract, the company has to reserve cash for you on your behalf. And that is a beautiful thing that doesn't really exist in many other places. The second reason is because it's positively correlated to interest rates. So the life insurance contracts that we primarily specialize in, that's universal life, that's whole life, those are positively correlated to interest rates. So as interest rates move up, you actually get to benefit from that. In a bond portfolio, as interest rates move up, it's very difficult to benefit from that move up in interest rates. In fact, it's probably going to hurt you. And then last but not least, of course, all that money that you put into those cash value life insurance policies, if you do it the right way, if it's structured the right way, that's tax-free. So whether you're retiring today, whether you're retiring in 10 years or 15 years, when you go to pull that money out, it is non-reportable, non-taxable, as long as you do it the right way, which is primarily done through loaning money out from the insurance company to yourself. You get those dollars. You don't have to report it to the IRS. You don't have to pay taxes on it. I honestly think that right now might be one of the best times in our lifetime to put money into a cash value life insurance policy. The worst time to put money into a cash value life insurance policy would be when rates are at their peak and they're moving down. And the only reason is because in that environment, a bond portfolio looks pretty darn good because those bonds, being inversely correlated to interest rates will actually appreciate in value. And I don't think we're quite there yet. So if you're looking for a safe alternative for your dollars and you don't like the idea of investing in bonds because you know it's going to hurt you the next time that the Fed ticks up interest rates, and if you're looking for a safe money alternative because most of your money is invested in the market or in real estate, I would just tell you that you should strongly consider cash value life insurance in 2024. And if you need help with that, we'd love to help you. Our job is to educate you on the pros and cons of these policies and make sure that it's something that's a benefit for you long term. If you want to talk with us about that, you can go to our website, leveragedwm.com. You'll see at the top of the screen there a little book a meeting. You can click on that and have a quick chat with us and see if it's something that can benefit you or not. But either way, I hope that you've had a wonderful 2023, and I look forward to seeing you more in 2024. Until next time.